Zach says, hello, Robert and Austin. Thank you for doing the show. I really enjoy and learn from your content. My questions are about alternative investments, especially private capital and private debt. What platforms do you recommend? At what allocations? And do you have any guidance on what to look for in an investment or any resources I can use to learn more? For context, my wife and I are professionals in our 40s. We are accredited investors by both income and net worth. We max out both our 401ks and IRAs. We have a townhome as an investment property and significant investments in stock ETFs and a taxable brokerage account. Our goal is to have around 20% of our portfolio invested in alternatives. We invest in Bitcoin, in Fundrise, Ground Floor, Percent, and Yield Street at the moment, as well as a couple startups we found on WeFunder, Start Engine, and Republic. Any help is appreciated. Thank you so much. Good question, Zach. So it seems like that 20% falls directly in that 15 to 35% that I just said. So I think you're doing a great job. To know that you're an accredited investor means that the two of you combined, I think, make $250,000 or $300,000 a year, and you also have that net worth of $1 million or more, not including your primary residence. So you are doing great. You guys are crushing it here in your 40s, millionaires, making a ton of money, and you want to begin taking on some of those higher risk ideas. I love some of these platforms you recommended. Fundrise, big fan of them. Ground Floor, I've heard good things, but I've never used them. Percent, I've heard great things. I have used them. They're awesome. I've also heard great things about Yield Street. Another one you can do is on Titan. I think they have the Carlyle Private Credit Fund as well. 8, 10, 12%, somewhere in that range. So go check that one out. I've heard good things. As it relates to guidance for these startups and any resources, things like that, join the Rich Habits Network. We offer the opportunity to invest alongside Robert and I every 4 to 6 weeks in some of these companies that are worth hundreds of millions, if not billions of dollars, because they're doing tens of millions, if not hundreds of millions of dollars in annualized revenue that are on track to either IPO or get acquired at a much higher valuation. So be sure to join us over there. I think you're really going to like it. The WeFunder, the Start Engine, the Republic, the reason I don't especially like using those is because anyone, quote unquote, can list their startup and try and raise money on those platforms. It's very much like Shark Tank for the town square, right? Anyone can just come in with their company, pitch the world on their thing, and try and get some money. I guess what I'm saying is I've never made an investment on a WeFunder, on a Start Engine, or a Republic that has been serious, in my humble opinion. I've invested into some cool things like, oh, that sounds pretty cool. Yeah, I'll throw them $100, right? Stuff like that. But when I make my serious investments, right, thousands, if not tens of thousands of dollars, they're alongside Robert, as well as alongside professional venture capital firms that have raised billions of dollars in funding and have seen outsized returns via IPOs and acquisitions, right? That's the type of investing I want to do in the startup space. So again, Zach, join us on the Rich Habits Network. We can send you some of those ideas. But Robert, what's your perspective on what to look out for with an investment?
Yeah, you did a good job uncovering that. And I'm going to stay right there and piggyback alongside you. I want to see track record. I want to see people that have done this before. Not that I won't take chances on a new quarterback or a new jockey, but for me, I want to understand and really stay away from people that don't have any history and don't have any experience for the most part. And that's why I think Austin nailed it, Zach. If you're going to be doing these investments, you want to do it in established ways. So many people, when they get involved in this type of venture investing and private investing, they start taking shots on random people that hit them up about an investment. The problem with that is either they don't know their numbers, they don't know how to build and scale a business, or worse, you're the last person, and that's why you're seeing the deal. Because all of the really good deals are going to go to the bigger names and the people like Austin and I that are in the mix, that are well known in this world, and we're going to see the deals long before the retail person. And you just want to make sure you're not investing in something that doesn't have a really strong opportunity to really scale and do well. So I think that's the important takeaway, is understand what you're investing in, understanding the numbers, and understanding the team, because at the end of the day, you want to find that tenacious founder or a group that has the experience that's going to make sure you win in the end with this project.
So here's an example, just to add a little bit more color, as to a company that I recently invested into literally this morning. And when I say invested, I invested $2,000. I'm not writing $50,000 checks or $100,000, but I'm adding a little bit more and taking my shots across these different types of companies. Here's like the numbers behind it, right? They're raising at a $350 million valuation. valuation. They're going to do $30 million in annual recurring revenue this year and projecting $55 million for next year. They have 5,900 customers, and one of their co-founders sold their previous company to Oracle, and the other co-founder worked at Cash App and Intuit. And then I'm also investing alongside General Catalyst, Google, the founder of YouTube, Substack, the founder of Uber, Twitch, the founder of Hims and Hers, and the founder of LegalZoom. So I'm not investing alone. I'm investing alongside some really smart people, which makes me feel good. And then also they're doing tens of millions of dollars in annual recurring revenue that should continue to go higher over time, which makes me think, okay, this $350 million valuation they're raising at very well could turn into billions of dollars, right? $1 billion, $2 billion, $3 billion valuation, which could be a 7, 10, 15x return on my money in 5, 7, 10 years if they end up IPOing or getting acquired. Those are the types of companies you want to be investing into, not the hot dog stands that might get listed on WeFunder or the I got an idea for an app that might get listed on Start Engine. You want to be investing into companies at these $100 million, $200, $300 million valuations that are doing tens, if not hundreds of millions of dollars in revenue already.
Just be careful, understand what you're investing in, and you guys already have your base built, so you're in great shape. You can be doing these investments. Far too many people with less than $50,000 are investing in these crazy concepts because somebody pitched it to them. So just be careful, because most of those are going to go to zero, and we just don't want to see anybody on our watch go backwards financially.